Going on, River?
Yo, what up, River?
Rob's. Damn, was that Norberto?
Yes, sir. Yo, you like that banger trade today I took?
I didn't see what you took today.
I took that S&P Micros on the it's ticker XSP. It's pretty
Oh
much
yeah,
SPX but like a micro contract.
SXP, XSP.
It's pretty much
Nice.
S&P 500.
Yeah, yeah. You
Was
actually
that
traded that
Norman?
thing? I know
Yeah,
a lot of people talk about that one.
I traded the 598. I mean the
I just don't understand why you trade it instead of SPY because they're like pretty much the same, you know?
yeah, it's just what I did notice is that those contracts move way faster than like either SPY or Qs.
Well,
Obviously,
yeah,
for a
because your
reason, you know.
because your dollar amount is a little bit more, you know, like this thing went from 586 to 592 today. So you got a nice $6 move on it. SPY did 585 to 590. So or 586 basically to 590. So
Yo,
it's
what's
like
good, River?
dollar amount.
River, do you hear me?
Oh, I hear you now.
Yo, what up, Grizz? Yo, Grizz, just tell me you're taking the Jets today, bro.
Norvin, what's good, Norvin?
Yo, what's good, man?
My guy, River, bro.
How we doing today?
I'm
Welcome in.
I'm, I'm doing well, man.
Yo, River, I really like shop, bro. Can we look at shop before you start class?
I just want to let you know my trading has gotten better from your lessons. I'm just letting you know.
Dude, I really appreciate that. Thank you. That's big praise for real. So thank you for saying that. Give yourself a pat on the back, dude. If it's working, you know,
It's working, bro.
I can give you some tips, but you're the one doing it. So,
Yeah,
thanks for the nice words, but
yeah,
don't forget to pat yourself on the back.
definitely. I still have work to do, but yeah, my trading has been gotten better for sure.
Oh
Thank
yeah.
you.
Appreciate it.
I love to hear that. Shit, and we all make mistakes, dude. I got a trade riding right now that's fucking absolutely roasted.
Yeah, bro. I realized that, like, bro, like the losses are gonna come,
Yep.
but those wins are there too.
Yep.
Yo, River.
I'm looking at shop here, dude. It looks like everything on the market, every big name has pushed up to a gigantic double top. And now the market it's gotta
Uh,
decide what to do.
I bet you shop because you've kept on mentioning that you've seen it gone to 1600s, you said?
Yeah, well, pre-split,
Oh, really?
yeah. But
Oh,
it's not gonna go back there. Like that's like what you have to remember. Because they did a 10 for one. So it got to 1,760. But you have to remember, there's 10 times more shares now. So if this goes back to 176, that's the same value that it was at 1,760 market
yeah.
cap speaking. For it to go back to 1,700, this thing would be like, well, I mean, I guess I don't know the market
It
cap.
would have to 10x its market cap,
Yeah,
basically.
and like,
Over 1,000?
it would be, I'm just gonna look just at it because I'm curious on Shop's market cap. It's a company that I love and I've talked very good about Shop for a long time. 143 billion. So for it to get back to 1,700,
It
you'd
means
be
like
sitting at a
300 billion?
1.5 trillion. And I don't know that Shop's got $1 trillion company in its
No, I
future.
think its main competitor, Spotify, is like it blows it out. It looks like a Costco.
I mean, I wouldn't call Spotify Shopify's competitor just because their names sound the same.
They sound similar, right?
I mean, the names sound the same. That doesn't mean. Dude,
Spotify's a music platform, bro. Shopify is just
I love you, Norman, dude. You crack me up, bro. You are so good. Dude, do you remember that time? Do you remember that time, Norman? And I'm not like trying to pick on you. It's just a funny story. But when SMCI, they're still dealing with it, but when they were dealing with some of their bad stuff, and we told you that they weren't releasing their 10K, and I get it, you didn't know that was a financial document, but your response was 10K ain't shit to SMCI. Oh, dude, I love you, bro. You crack me up.
Classic, bro.
Dude, you're
What
classic.
about him, bro? That shit was a banger. After I took a mugshot with some pills, like
Dude, this like right here, dude. This is the day that Norvin sent me
fuck, dude.
picture of
Dude, do I have
himself
a
with his
fucking gift
ball.
or
Dude, right here, dude.
dude, with Anthony, bro? He's the one.
Hims. I could have got Hims. I had like 5 contracts of Hims, like $133, and I was down $100. And then that same week on Friday, each con was $800.
Yeah.
So
Yeah,
for a loss, bro.
I'm gonna tell you a little story about like these type of companies. Like,
Norvin, nah, dude. This ain't Norvin's story.
look,
Dude, type it out for us on Trade Floor, dude. Type it out on Trade Floor for us.
Beams, Robin Hood,
Oh,
and
yeah. Rudy, how we
Dude.
doing?
Palantir are gonna be at $300 in less than a year.
Palantir, you said?
Yeah, Palantir, Hood, those are gonna be like at 300.
How about Weeble, bro? Because Weeble, I don't know about Weeble. It's at like for what, $12?
It's not love. It's not love by the community, bro. It needs love.
Yo, is that how we know the top is in?
What's happening, Clandestine? We're doing trade management today.
Trade management, let's get it.
Yep. We'll get rolling here in a second. Wow, Weeble SPAC ain't going good, huh?
Yeah, man.
Wow.
It needs like a partnership with Futu or some shit, you know?
Norvin, Norvin, dude, you're about to get the mute, Norvin. We're 3 minutes in.
You think Weeble is good for shares right now, or is it like, I don't know. It's like it feels like it's undervalued or something.
I mean, I don't even know. Like, I don't even know. I mean, because this whole thing, like this whole chart to me is weird because, like, here's IPO day where SPAC took over Weeble, or whatever. This is weird. Like, this thing's been around for a year, this SPAC doing absolutely nothing, And so this one's a little weird to me. I think it's super hard to put a value on it. We don't know much about it, They got it at a 5 billion market cap. I don't know what Weeble's worth, to be entirely honest with you. Like, they are a trading platform, don't get me wrong, but like they're like secondhand weird trading platform, non-direct to broker stuff, So I mean, 5 billion seems like a pretty decent valuation for them. The only money they're making, they have like no commissions, so they shouldn't be making a ton. I'm super excited for this earnings. I didn't realize it was next week. I thought it was in June. I'm super excited for this earnings just to learn something about them. I mean, if nothing else,
I feel bad for those fuckers who bought it at 79.56.
Yeah, can you imagine me?
Yeah, that's crazy.
Somebody did that, dude.
Somebody did do that.
Norvin bought it at 80.
Nah, they're tight right now, bro.
They are.
They're punching the air.
No, but yo, River, before I mean anybody has a question, but RGC, a SPAC that did work, yo, 14 to it's at $500 in less than a month.
Sounds
It's
like,
a HKD type of style. Hi.
oh my god, you're so insane. Dude. It's a biotech company. Biotech.
Oh, how about Nvidia?
$1 million, baby. Give it to me.
Nvidia is at like a weird spot right now, in my opinion. Like it's just
It's everything in the market. Like,
yeah,
in the market is at a point
weird.
where we explode or we don't. So
Yeah, man. I'm very
we're waiting on
confused.
something, we're waiting on something.
Like I'm not the only one that's confused, right? Like, are we gonna pump? Are we gonna dump? But like, are we gonna have a retracement? Like,
No, I think everybody's confused and everybody should be confused. I mean, this pump is not justified, but we are seeing this very prime example. Let me make a post and then we'll get rolling here. Second. And we'll talk a little bit about the market because today I don't have this isn't like necessarily a super long, super intense lecture or anything like that. I'm gonna have plenty of time for questions at the end, but we'll talk market a little bit in the beginning. I think it's always a good idea to at least, touch base and some of us share our opinions on what we think's going on. Give me 1 second. Okay. Let me get a drink of coffee.
Yo, River, quick question. This is
No,
the last question of the evening. 522 on the QQQ, it respectfully rejected it. Can you like tell us why?
Well, I mean, because everything in the market, okay, their charts all look something like this because we had all that mayhem around the all-time highs. It's like there was just so much uncertainty coming into, end of December, all through January, tons of uncertainty. What that means is there's a whole mountain of levels in here that are going to stop us. So if we start looking left, and I know I don't have it on my charts, but you always have to look left. If you want to know what's going to happen to the right, look left. So I don't have that 522 on my charts. I should put it on there, obviously. Here's 521.92. Massive rejection or massive bounce off of there. And then you just keep looking back. Big old bounce turned into an absolute dump point, big old explosion above it, bounced us and closed us there. So then we go into today and is 521.93. So if you ever want to know why'd the chart do something to the right, go back and look to the left and you will almost always find your answer. But as far as big market, we can go back to NVIDIA, like I said, daily timeframes on basically everything have a whole bunch of congestion to the left, right where we are. It really doesn't matter. You can look at really any of the big names. If we start looking left, we likely have big resistance somewhere right overhead. Microsoft, double top, massive double top. NVIDIA, obviously, we looked at that one. Amazon, another one. We start looking left. Where do we think Amazon should stop? Right here, 215. So far, where did it stop? I mean, this was people were asking me on Friday about Amazon. I said pretty easy to swing short on it, and so obviously here's our sell-off, as we push up into these big levels. So again, all major ETFs doing the same thing, big old congestion to the side. Well, or IWM, it's still just slaughtered. Oh, but even look at that, double top on IWM. Whole market has now moved itself to a very important place. The market is now ready to make the decision. Do we break out and go higher? Do some of these things go visit their all-time highs, your SPYs, your QQQs? Maybe, does the Dow start to, play some catch up? Obviously, it's still far off all-time highs, the dough, as Norman calls it. And so whole market has pushed up to what most traders refer to as an inflection point. The market now has to make a decision. Doesn't want to continue running, doesn't want to pull back. Do we want to get some retests? I mean, and don't get me wrong, we caught this pullback to this trend. This massive of selling with a breakout we never really even retested the trend, if we're being real here. I mean, we didn't have any poke under it. We had nothing. We broke it and we ran, and we've now ran $50 past the trend. This type of movement in the market, extremely unhealthy, backed with a bunch of, FOMO, hopes of deals, all of that stuff. We're reclaiming a bunch of these SMAs, that 200-day SMA, a bunch of us talk about it. Weekly 200 SMA was very close to the bottom. And so my opinion, sooner than later, we revisit this 200-day. It's going to be gradually moving up if we keep pushing up or even start going sideways. It's really flattened out, obviously, hasn't started to tick down. But I personally think a 200-day retest makes sense. I also have to point out, it's $23 below us. I know that these last 2 months in the market, 3 months in the market have built very, very bad habits, very hard to break habits. We've been able to buy $6 out of the money, SPY puts, SPY calls, whatever, intraday, and they work. They shouldn't work, and now as the market's slowing down, it's starting to catch up to people, and people are trying to have these out of the money things. They're looking for these, massive V-shaped recoveries or just explosions or dumps, and they aren't coming. So they're losing money. So I don't think it is worth it to put on a trade looking for the retest short. As most of you guys know, you can go back and find my post after this day. And you guys know, you guys know me, I was bearish. I was super bearish back here, documented. I was bearish at all-time highs. This was bearish price action. When we put in this ripper of a day and those tariffs were canceled, as I had been telling everybody, no bottom without answers. That's what I told everybody starting in February all the way until that April low. No bottom without answers. Did we get answers? Not really, but kind of. So we have to start thinking about the market. And so you could find my post, I don't know, look up temporary bottom or something on trade floor. I'm sure it was after this day. I said very likely temporary bottom is in. So because this was all self-inflicted. This was a terrible economic decision. So the market got clobbered. This is what the market felt when that very bad decision was taken back. It was the largest single day dollar move that the S&P has ever made. Thing at $50 or whatever it was off of lows. So while we didn't get answers, we got the really bad part of the whole tariff situation, which was the insanely high ones. Myself, I don't think anybody in the market, I don't think most economists on the planet are opposed to the 10% universal tariff. I mean, is it necessary? I don't think so, but I'm not an economist or anything. But we don't really care about that. Tariffs are fine. Tariffs are a cost of doing business. 100% tariffs, 90% tariffs. That's just an aggressive action. That's not anything good for anybody, So we get tariffs out of the way. That was when I started to feel a bit more comfortable in dip buy mode. Still not full dip buy mode. Obviously, we saw some nice selling after that day. Once this trend was reclaimed, for me personally, I've been buying dips as opposed to shorting rips lately. That's what the market tells us to do. So why is the market running? We have and this is just technically speaking, no opinions or anything here. We have no deals. Nothing has been finalized. All tariffs have been bumped back for 90 days to be revisited at a later time. So the market is running, in my opinion. Keep in mind, this is my opinion. I could be dead wrong. The market is running, in my opinion, because it's forward looking. So it gets to say, okay, we don't have these really bad tariffs in place, and we have a pretty good shot of some amount of deals, whatever they might be, happening in the next 3 months. As we know with economic things, they typically take a long time. So hopefully they'll be done in 3 months. But the market now is saying, we don't have answers, but looking forward, deals should be made as we start getting closer to, whatever that is, June or July, whenever the first 90-day pushes. As we start getting closer to that, if we don't have a bunch of deals laid out, I feel like the market starts to feel it will start to get a little bit tenuous again. How I've been describing this to my friends, the market now needs a slow trickle of news to keep the buying going on. Today was a pretty nice day, nice bounce on SPY, obviously, no denying that. But we had a couple of days of nothing, and then, or a day of nothing, and then kind of another day of nothing. And even this day, granted, it was on the back of a big gap up, but a lot of sideways. So I'm viewing this as where we are in the market now is it wants more. We need some news. We had good data this morning, as far as I'm concerned. We gapped down. Don't get me wrong, the data helped us buy into the open and likely was the buying from the day. But we were staring at a pretty healthy, $4 gap down before that data came out. So now I feel like the market it needs some news to keep pushing it, whether it's a deal, whether it's a discussion of a deal. I mean, that will get the market to continue going up. The thing that I've talked about forever and why I think we've seen a really nice move, in this last week and a half upside, even with our choppiness, was talking to China this weekend. All of the other tariffs, completely useless in most people's eyes. Wouldn't have affected the people as much. The China tariffs kill the American consumer more than anybody else. So that's why I think the market got some good buying after this weekend, after that meeting where they had, not a deal, not even close to a deal, not even a thing on paper, but a discussion, which is step number one. And so the market has done, a little bit of buying here and there. As we can see, when we don't have anything too exciting, we're getting some chop. When we get some good data, the market says, yeah, let's buy it, kind of push up to the next level and see what we're going to do. And so we can really see that in the daily charts, cut tariffs, chop around, I'm sure that right around here, we got some more news, chop around, likely some more news, chop around, China deals explode, chop around. I imagine that's how the market's going to be. When I said I felt like a bottom was in way back here, my words were, I don't think there's any way it's a straight line up. And I'll be the first one to tell you, I was dead wrong. This is, as far as I'm concerned, we run from 520 to 590 in a couple few weeks. That is a straight line up as far as I'm concerned. So I was definitely wrong on that. But now I think we just have to kind of let the market work. If we get some good data, obviously good data, good news is gonna, get the market buying. Bad data, bad news, likely going to get the market selling. So I think we just kind of take it a little bit easy. If we get that dip down to the weekly 200, like I said, I don't necessarily, the daily 200, I don't necessarily want to be involved in the short trade down to it, but I would love to be involved in the bounce trade if we get down there. The one thing we, of course, have to take note of, we do have this one very large gap right here. Gaps like to get filled eventually. As it sits now, the low of that gap is like, I don't know, $23 below us or something. Yeah, $23 below us. 200 days, $17 below us, So I'll be interested in a dip buy here. I am in dip buy mode. Do I think that it's a justified dip buy mode or anything like that based on data, based on what we have going on? No, but that doesn't matter. The market, one thing that it like 100% I can guarantee you, and there's very few guarantees in the market. One guarantee that I can make you is that it does not care about my personal opinion even one bit. So you have to kick your opinions to the door. I've been having this discussion with a bunch of friends lately that, we were making some nice money short, and they're on the same page as me of this stuff makes no sense. There's no deals. And I finally, I've just had to, to a few of my friends say, stop. We can hate it all we want. We can think it's wrong all we want. We can love it all we want. It doesn't matter. Whatever the market decides to do, we have to jump along, because bias always kills you in the market. But as I said, at least, I mean, I can comfortably say this is the most volatile market I've ever traded in. So that very likely means the same for all of you. If you're wrong on your bias, you get destroyed. Shorters today wrecked. Was there some nice, don't get me wrong, was there some nice shorts to be had? Yeah, we took a couple of shorts today. But as a whole, if you were short most of the day, other than a couple, real nice entries, you were torched. And so you gotta ditch your bias. Whether you agree with the decisions or not, fine, have your opinions, but if the market's buying, we're buying. If the market's selling, we're selling. That's what I always try to teach. So with that turned into a little bit of trading psychology. Sorry, y'all had to listen to me yap. But today we were talking about nothing involved with anything we just discussed. And we were discussing, well, I guess maybe a little bit, managing trades. And this is specifically short-term trades. Obviously, swing trades, things like that are managed and traded in a very different way. I'm not saying you just swing trades because they're deep red or anything like that. But generally speaking, a properly planned swing trade is going to have wider stop, further out price targets. They're going to be managed different. They're going to be, generally speaking, substantially higher risk just because you have no control what goes on overnight. But so today we're going to be discussing scalps as well as day trades, and how do I manage them. So with that, welcome everybody. I know we're 20 minutes in. Dirty River, happy to have you. If we got any questions before we start, send them. Otherwise we'll get to rolling. Yeah, Aaron, exactly. I don't want to say that they predict the future, but the boys at Citadel, they don't care what happens next week. They care what happens 6 months, a year from now. That's their time. For
Yo,
us.
River, can I say something?
Norman, yeah, we'll give it a try.
You know how you said Citadel?
Yeah.
You see that volatility at 12:30 right after Robinhood closes?
Yeah, I don't buy into that. It's not because of Robinhood. It's not because of Robinhood. Retail traders don't matter that much. There's no denying that at 12:30 you start to see a massive increase in volume, but you have to remember it's oftentimes the turning point where the volume really starts to pick up. That's all day, every day. That's long before Robinhood existed. You can go back to 1995 and the same thing's happening. That's because of more advanced market stuff, market on close orders, settlements, exercises. All types of things start occurring 30 minutes to close. And then obviously these last 10 minutes to close where, we'll say 75% of the time you see some really, really nice volatility. That's the market on close orders going through. It's an MOC order. Anybody can place it. It just 10 minutes to close, it will market order out of whatever trade you're in. So that's why you see this massive volume, because there's oftentimes, you know, many like hundreds of millions, if not billions of dollars worth of orders being opened and closed right here. So that's what we see. If you use Thinkorswim and you ever want to look at it, you can feel free to message me and I'll tell you how to, you know, locate the MOC for the day. But it's, you know, it's nothing to screw over retail traders, as much as we all want to think that, you know, they wait until 12:30 to kill the Robinhood people and then put in the move. It's you know, it's nothing to do with them. And it's not even that high. It's not even that high. I mean, people try to say that, but you have to think of it this way. Okay. So, and again, we're getting off topic. We'll get on topic here soon, I promise you. So last candle of the day right here, 4,316,000 volume on that candle on SPY. So you figure an average price of 589 bucks, that is $2,542 million. There's nothing involved with retail traders when you were discussing that much money being exchanged on something like this. You know, are retail traders involved in the market? Sure, but they don't cause anything. You know, a lot of people, unfortunately, they get wrapped up in this. They're here to screw me over, you know. It doesn't matter. Yes, I will not deny it. I've done this for a little while, and that is one time retail traders won. You are delusional if you think that big money was not hopping on that train as well. But GME, I will not deny it. That was the one time that I've ever seen in my life where they in fact did do something. But hedge funds learned a lesson. That'll never happen again. You know, it's like AMC. I saw Citadel was the largest profiter off of the whole AMC move of anybody, you know, because they were deep in the money calls, so they printed. Okay, so with that, here we go. Dirty River, talking trend trading, scalp trading, and trade management today. So we're going to talk about a trade today that I took as a scalp. I managed poorly. I got a trade that's getting wrecked, so I've just been scalping against that thing to just like try to stay green on the days, you know. So we're going to talk about a trade today and how I identified that trade and what did I look for and how did I manage it and how could I have managed it better? What we're going to discuss with all of the trade management, all of that stuff, you can apply it to everything. It doesn't matter if you're trading, you know, Apple, Amazon, SPY, QQQ, GameStop, why not? It doesn't matter what you're trading. When we have become involved in a trade, we only have two things in our mind. Well, two very important things in our mind: stop outs and take profits. Those are the only end goals. The only ends to our trades are our plan works or our plan doesn't work. Well, the most crucial part of all of it is entry. So with a good entry, we can minimize risk and maximize reward. How I always describe it to people is a good entry can make a good trade great, or it can make a bad trade not too bad. You know, it can keep it just a reasonable loss. Don't get me wrong, we all have trades that get away from us sometimes, especially swing trades. You know, like I said, that's what I'm dealing with right now, was just a swing trade that went awry on me, you know. So now I shouldn't even still be swinging the thing, but I've scalped so much against it that even though it's basically worthless, it's, you know, it's still riding with me, but at least it's financed. So the trade that I took today that we're going to discuss is Apple. And how did I know I want to trade Apple? What was I looking for on Apple? So initially, I was nice and happy with Apple yesterday. Took an Apple swing. You know, we had reclaimed this 4-hour trend. You know, if we got to these longer time frames, we look at Apple, we say, okay, nice 4-hour trend here. You know, and we reclaimed it into close. Nice little continuation candle. No denying potential little double top, triple top situation going on. But to me, that push up to that 214 to set the double top seemed very likely. Well, trade got away from me. Obviously, it got clobbered overnight. Few tweets, you know, you get a couple tweets against the company you're in and you're wrecked, you know. Well, I wanted to still trade Apple today. Yeah, blame Danny. I will blame Danny. Tell him I said that. So I still want to trade Apple today. I'm still overall bullish on Apple. What makes me overall bullish on Apple? Just that this move, as I said, basically everything's pushed up. I look at Apple right now, and to me, nice strong breakout. We're getting a nice consolidation. We gapped up. We've held the levels that we want to hold. So for me personally, I'm just sort of in dip buy mode on it. I'm not looking for the reversals back to all-time highs, but you start giving me little dips in the bottom of the range and a nice, very defined top of the range that's giving me a couple few dollars of upside. And I feel very comfortable to be a dip buyer on names like this. So when I go to the daily time frame, all I want to do is identify. And for anybody who doesn't know, I do most of my charting, all of that stuff, other than intraday trends, any biases for the day, any trades that I want to take, they are all identified on the daily time frame. So I pulled up the daily time frame this morning, looked at Apple and saw that I was nice and red on Apple, and said to myself, where do I have interest in buying the dip if it shows up? So I start looking left. I look over here, I look over here, and I start to say, okay, well, this 209.60 level is pretty good. 208.42 is sort of a worst case scenario. And we have, and it wasn't obviously, because we have a new one, it was a little bit higher up here. We also have the 50 SMA, the daily SMA. So we've reclaimed all of this. And yeah, 208.42, 208, whatever you want, So we've reclaimed these SMAs. I know I have the SMA support below me. I know where my level is, this 209.60 level. I mean, it's on there. We have those levels from before. So even with the push down, I see good data. I want to look for a dip to buy. So we got a nice push on Apple. Right here was where I just kicked myself for not just selling my calls. And then we start to sell, and we start to sell, and we start to sell. Well, I'm a dip buyer. I know where my 209.60 is. I know that I will likely stop under that 50 SMA no matter what. So I'm looking to buy the dip down here. If we start to look left, our pre-market lows, 209.30, and we go back to our daily time frame, and obviously the SMAs, as I said, have moved a little bit because, now we have a new day on it. They were this 50 SMA, as I recall, it was 209.32 this morning when the market started trading. So I start looking left, and to me, no brainer. This is the dip buy right here. So thankfully snuck in there on a couple of little calls, had my orders sitting there waiting as we're selling down. I know that my stop is very tight. So how do I manage this trade? What do I look for? What am I actually looking for? And how could I have managed it better? And so I'm going to teach you my favorite strategy for holding a trade. Obviously, I was going to show you AT&T today, but it was just too much like, this is too good. It won't always be like this, So we're going with Apple, where I unfortunately didn't manage it as good as I could have. Well, I bought the dip, and I didn't buy it like right here. I was a little high, I obviously went red on it. I didn't bottom tick this thing. Well, my first target is the EMAs. When you're planning any day trade, any scalp, you need to know 3 things before you know anything else, as I said earlier. Entry, stop out, take profit. Those are the 3 most important things in that order, because if you don't know where you enter, you don't know where you want to enter, you don't know how much you want to pay. If you don't know where you're going to stop out, then again, you don't know how much money you're risking. So you're instantly going into this trade blind. You have no idea what you're trying to pay, and you have no idea how much money you could potentially lose on this trade. So you have to identify those first. If profits come, take profit. While it's technically the 3rd most important, that's only because there's nothing else that we care about, If profit comes, great, protect it. That's our job as traders, is to protect our capital. We want to use as little money as we can to make as much money as we can. I know that's not what the YOLers want to hear. Slow, safe money makes you more money than random YOLOs that hit and huge losses that hit back and forth and back and forth. You know, those quick trades make you a lot more than looking for the home runs. So we know our entry, 209.60. We know our stops are really going to be about pre-market low, that 50 SMA. If we start selling under there, we're very likely going to go visit this 208.42. And we don't want to have a $1.20 of risk on this trade. We want to have 40 cents of risk. You know, that's our goal, small risk. So target upside to 1035. You know, we're risking 40 cents down to make, I mean, quick math, 80 cents up. One risk, two reward trade. Beautiful trade. So, and even if you just take them all right there, that's great. So I took my entry, as I said, somewhere down here. You know, identify that from the daily timeframes. Where do we want to be dip buyers? Now we get up here. So now we're going to get into what this lecture is all about and what I recommend people do. It works for me. Maybe it doesn't work for you. Always feel free to ask questions if you have, you know, any of that. And yeah, Rob, exactly. And we're going to talk about that. So we enter down here. I don't know what your account size is or anything like that. You know, if you only have one and you hit your target, you sell it and you look for a new entry, if anything. But if you have a couple, how do we manage these trades? So something that I like to teach is, you know, a day trade can turn into a scalp. That's just fine. If it works really quick, then, and you just want to take it off, you know, you hit your targets really quick and you want to be done with the trade and it's a quick scalp, then awesome. You want to be slightly more cautious letting a scalp turn into a day trade, because maybe you're just kind of holding past your stop out on what you thought was going to be a quick little scalp, and you're really just holding when you should be stopping out, saying, oh no, it's a day trade, I'm going to let it work for a little bit. Letting it work is fine. Not following your rules is not fine. But so when I entered this, I was looking for really more of a day trade than a scalp up to this VWAP. So you're going to see how I manage this trade. And I'm going to explain how I manage this trade. And you guys know me, I like to keep everything super simple, and I like to let the chart tell me what to do. So we take our entry down here. Well, we hit our EMAs, so we trim here. Now my rules start to come into play. So if I trim, my stop loss moves. And 90% of the time, your stop loss is only allowed to move in one direction, and that is into profit. When you start widening stops, you start messing up your risk reward, you start eating bigger losses than you should be. So a nice rule with stop losses is they only move in one direction, and that is into profit. And so my rule is, if I trim, stop goes into profit. Because if I was happy enough at that point to sell a few contracts, I'm not letting that thing go red. Because, you know, we've all done it. You know, I don't do it often, but we've all done it. And if you build that habit of letting your green trades go red, and, you know, don't get me wrong, if you go 2 or 3% green and it goes red like that, you know, those things happen. Like that's not what I'm talking about. If you trim and you let the bulk of your position go red, that is not good. That is a very, very bad habit to have. So, yeah, exactly. And that's exactly the feeling. So why I recommend this stop, and Aaron even kind of touched on it right there. Why I recommend moving that stop after the trim is a big part to protect your profits. Even more than that is for your trading psychology. You can't lose money. When that stop is in profit, you are making money. And that's what Aaron's saying here. It goes from will I make money to how much money will I make? That is the exact description of what I am describing here. When you've moved into this, when you've moved your stop into profit, all of a sudden there is no fear left. You are making money. You know, mission accomplished. Like, you have done it, you know, like you guys have all heard me talk about GameStop. I think it's the plague, blah, blah, blah. Of course, if you hit a good trade and you want to talk about it, and they're good for you. I'm not telling you don't do that, but always remember you're trading for yourself. Nobody's going to care if you hit 1,000%er. You know, there might be a few of the pocket watchers on TradeFloor that, you know, bring it up again, but nobody's going to care about the trades you hit. except for you. You're the one who remembers them. So always remember, trading is for you. You don't need the 1,000%ers. The people taking their 20, 30, 40%, their 20, 30, 40% all day, every single day, they're making so much more money than the YOLOers and the people looking for the home runs. So we move our stop up. Nice, you need to hear that. Let's see. Can you put a stop after your order? It doesn't have to be before order. It has to be after your order. What you want to do before you place your order is identify where you stop out. Great question. So right here, you can see I don't have a line here. I'm not a big pre-market low, pre-market high trader. I will always take note of them, but it's not a line that ever finds a place on my chart. So my stop, and I always have two stops in mind, technically speaking, but my stop is a close below this pre-market low. If we're reversing below there, the market is likely going to keep going down at least a little bit more. So I want to be out of the trade. So I identify that before I ever click the button to buy. If I don't know where my planned stop out is, I am not entering a trade. So once you've entered the trade, and I'm not saying put a hard stop loss right here. If you do want to use a hard stop loss, maybe you have trouble clicking that sell button. Put it a little lower than what your stop is. Market loves to, you can see here, it loves to wick a little bit of a low and then buy back over it. So you don't want to have it lined up perfectly with this pre-market low. Maybe you put your hard stop a little bit below it just to give it slightly more breathing room. But for me, it's a candle close below that level. Of course, when I say that I have two stops that I use, the first one, it's my planned stop. It's a mental stop. If we close under that level, I'm stopping out. I'm lucky enough in my trading psychology that I stop out. I know that a lot of people have trouble clicking sell when they're red on a trade. They hate doing that. Well, I stop out. So I have that. I also have what I describe as a protective stop, which is my, you might hear me call it my oh shit stop. Got many names for it, but it is the point where I'm out. That's the maximum amount I'm willing to risk. Maybe I buy a $50 contract. Maybe I know I'm risking $10 of that contract, 20%, never think of it in percents, but maybe I'm risking $10 of that contract, but I won't risk more than 25 of that contract. So I put that stop at 25 and it doesn't move. And that's the one that moves up. So, yeah, Raphael, exactly. It gives you, if you have time, much less chance of being stopped out. Same days, tight stops will always get tagged. With time, you just deal with the delta. You can start to do a little bit of delta math if you want. Yeah, Robinhood and Webull, yeah, once you've placed your order, that's when you place your stop loss. When you're in the trade, your stop loss is placed, and you can adjust those as much as you want once you're in the trade. Okay, so stop loss is covered, entry is covered. We know our entry. Now, how do we manage it? How do you get runners? As I said in my post, my two most common questions are, where do I stop out? Well, now we see where we stop out. Always based on something to the left and a break of a major low. If we're buying calls, we stop out on those calls below the break of the major low. If we're in puts, we stop out on the break of the major high. So that's simple. The real most common question I get is, how do I hold longer? And I want to point out that, and people joke about me selling early all the time, and I love it. Keep doing it. Makes me laugh every time. What I teach and what I actually teach and what I actually believe is, if it hits all of your targets, you should be out of the trade. However, if you make the decision to hold a runner, maybe it's financed, we aren't going to get into all of that. How can you manage it? And what are some things you can do to protect yourself while still letting it work for you? And so my favorite thing to do, and people, you'll hear me talk about it all the time. There's two types of candles in the market. There is trending candles and there is ranging candles. What is a trending candle? It's something like this. It's a bearish candle. It's closing way at its lows. You see in these kinds of things, bearish candle closing way at its lows. Bullish candle closing near the highs. Those are trending candles. Trending candles. Range candles are like dojis. you know, dojis, inside candles, all of that. Those are range candles. This type of stuff where you're getting wicks on the bottom, you're getting wicks on the top, small bodies, you know, you just aren't getting a lot of information from these compared to something like this. Big wick on top, bearish candle closing near its lows, hardly even bounces. You got another one closing near its lows. Again, closing near its lows. Finally, here's your first sign of buyers showing up. I don't care about hammered, you know, dragonfly doji. I don't care about all that nonsense. What I care about is what does the candle tell me? Who is winning? That's all we care about as traders. Bears are winning. Bears are winning. Bears are winning. All of a sudden, we got, I mean, yes, it's a red candle. Yes, it is closing lower than the previous low, but the buyers showed up. The buyers bought it above a level, and the buyers, you know, closed it above the midpoint. So is it lower than it was? Yeah, but that's our first sign of buyers trying. So how can we use this to manage our trades? And this is super simple. It might be a little more difficult for people on Robinhood or Webull. It's very easy for us on Thinkorswim because when we place an order, it puts a line on the chart for us. Well, this is the trade I took today. I was targeting VWAP. So I took my first trim here. Yeah, opening ranges are always going to be on wicks. Support and resistance trends, for me, everything's on a wick. Yep, and then this blue line is a script that somebody actually made and sent it to me, and man, they aren't in the group anymore, but shout out them, I use it every day. So it adjusts until it's set. So, and then I always do them off the wick because...
Yeah, how many candles again, though?
What's up?
How many candles?
So first hour and a half of the day.
Hour and a half, yeah, that's right.
Yep. So on a 5-minute chart, 18 candles.
18
and then
yeah.
Just to touch on that a little bit, and great question. Why do I do the wicks? Because it's where one side gave up. So we can see a couple today, strong buying, strong buying, strong buying, strong buying, and then all of a sudden this thing's clobbered. This is where the bulls stopped, or you know, this is where the bulls lost.
Wait, so River, how about like if those candles close like full, does that mean we're fully bullish? Like if that whole candle just
like
filled
this
up?
one?
No,
So
the green one.
this
Yeah. Like if it just filled it up.
yes, but the wick is worrisome. I don't want to say you should exit you know, if you're long and you're in this trade, you aren't going to exit just because of this wick. But, you know, this candle's a big old green candle.
Yeah.
To me, something like this candle,
Yeah.
much more bullish than this candle.
Okay.
Because
it's more
of
up.
it
Okay.
closing at the highs. Is there times
okay.
where you're going to get a close at the high and instantly get clobbered down? Absolutely. Or, you know, close at the lows and take a big bounce? Absolutely. That's why you have to start being realistic on day trades, things like that. At a certain point, you're going to get a pullback. You know, you put up 8 candles in a row that are all green, you can kind of look for a pullback. So how do we manage? Based on these candles. So
how fast were you drawing a trend on that thing, by the way? Like, because you're big on diagonal trend lines during the day, Rev.
So technically speaking, a trend,
like were you drawing the line on that thing on the 5-minute candle, and you're like, because you're always posting those.
Yep, like that. That's my trend.
Yeah.
And this trend is identified off of this candle.
So you were mad at yourself for what? Not stopping out after it closed on the retest of the diagonal trend?
Well, I'm not even going to use the trend tonight because I don't want to confuse people. Obviously.
Okay, my fault. Yeah, my fault. All right.
Oh no, you're great, dude. I did. Asking questions is like the best of the best. Never stop asking questions. But we're going to keep it simple. We enter here, we trim here. As I said, I was targeting VWAP, so I was all out.
Yeah.
I could have managed this better. Here is how, if I wanted to manage a runner, this is how I do it.
Wait, so you went out on VWAP?
Yep, I was fully out right here. Order was set.
Why are you mad about being red on it?
Oh, no, that's a different one. This is no.
Oh.
No,
You
I
did a-
swung.
You got back in?
I was in Apple calls right here. Yesterday close, minus 20%. Swung them. Biggest mistake ever, not selling right here.
And then you kept them. Then you closed it. Oh, that's why you're so
even bigger mistake not closing right here, and probably an even bigger mistake seeing this candle and swinging them again.
How many trades was this?
That's just one that I'm still holding, that I'm minus 80% on.
Did you average down?
This one was a scalp.
Okay.
I'm trying to cover that. you know?
Yeah. All right. Never mind.
So I take my entry. How could I have managed this better? We use the candles. So ignoring all of our targets, ignoring all of that stuff, how do we use the candles? As I told you, we only have trend candles. We only have range candles. So what I teach people to do, adjust your stops when you're into runners, you know, that kind of stuff based on the candles. And how do we use the candles? We look for a breakout candle. And what is a breakout candle? It's a candle that closed above the high of the previous candle. So if this was a normal trade for me, you know, obviously not how I trade SPY. This is how I trade individual names more than anything else. This candle right here is a breakout candle. It's closing at new highs. So we've trimmed here. We've moved our stop to here. Market pushes up again. When this candle closes, we move our stop to the low of this candle. And why do we do that? Because it's set a new high. You know, maybe trend's still down, whatever, you know, but the candle has set a new high. It's closed at a nice high. So it's attempting to break out. We aren't saying break out and run for the rest of the day. It is breaking above the previous little range that we have right here. So this is our breakout candle. Closes at a new high, pushes above our little ranges and our resistance. We move our stop to the bottom of it. Well, if we get another breakout candle, we move our stop to the bottom of it. If we get another breakout candle, we move our stop to the bottom of it. If we get some more breakout candles, we move the stops to the lows here. You know, here's our, you know, this one's kind of a breakout. It is higher, but not dramatically. Here's our nice breakout. So I'm bumping my stop to here. Maybe this one wicks you out. No big deal. You capitalized on most of this move. However, if it doesn't stop you out, you know, we're just talking best case scenario, doesn't stop you out, you start to see more breakout candles, you move your stop up. You see another breakout candle, you move your stop up. You see weak breakout candle starting to have sellers show up on the top, ratchet that stop up. Let the chart tell you what to do. Of course, if you got, you know, 10 contracts or whatever, trim your EMAs, trim your VWAP, trim your level. Anytime you're trimming, you're moving your stop. Anytime you're seeing a breakout candle, you're moving your stop. So maybe you leave your stop here because you don't like this breakout. I mean, don't get me wrong, you catch a move on Apple from 209 to 212.50. You should probably be tightening up those stops, but maybe you don't, you know, maybe you don't move it. Well, you're going to get stopped out on this candle. No big deal. You still capitalize on most of the move. This is how I trade. Any individual name, this is how I trade. When I tell people move your stops up, you know, some same day Friday scalps are obviously different, but you're trading things with time. This is how you should trade it. It doesn't matter the chart. It doesn't matter any of that. Something that I actually discussed with my buddy, kicked myself big time. You guys know I love a 3-push wedge. You know, first leg up, second leg up, third leg up. 100% reasonable short right here. And if you do short this, you manage it the exact same way. And so this is kind of why I wanted to do Apple today, because we get to see it up and it down.
So
you short
do
here.
you wait for that? So do you wait for that 3 wedge to come and then you short, or is it like?
Yeah, and I'll tell you what, it's
It posts back up, right?
Because if you start looking like, you know, through the market, you will start to see these things popping up. There's our 3-push wedge on Microsoft. This one, this one's not as good. Obviously didn't push all the way up. Still a double top.
Okay.
And
Yeah,
then,
big time.
So is that
was
the doji the range candle around the top too? Isn't that like more of a confirmation too that you're sitting in the range? That it's already breaking back down into the open range.
up,
Yep.
down, up, and then down? Okay.
And so now we got Amazon here, which was weak all day, obviously. So now all of a sudden we can kind of start to look at SPY and hey there, little 3-push wedge on SPY, you know. And this was actually even another one which provided a very nice
range candle right back at the top.
And then so we get our first push up, our second push up, our third push up, very reasonable short, stops above highs. And so
look at the candle. Oh my god, look at the green.
And
that's
so,
the 5-minute daily? This is the daily, right, chart?
Yeah. And this 3-push wedge is just a nice little thing to do. And they pop up all over the place. Why do they work? Because algos like simplicity. 3 legs. I mean, 3 legs is classic, has been in the market forever. You know, so you can have another one right here. First leg up, second leg up, third leg up. The really nice thing about them is you'll get a scalp. If you aren't greedy, you'll get a scalp. Other
Yeah.
times you catch the reversal. And so when you have, and you guys can see, I love,
Just going right back in their open range
love
or
three
something.
pushes, you know, and so I love all that. Okay, but so to go back to Apple, I see a question. Where would our stop be? So if we long this one, our stops are lows down here. If we're shorting this, that's a breakout above. Anywhere, you know, above 213, maybe, you know, anywhere up here. This is that 4-hour trend. If you wanted to have the slightly wider stop, you know, over the 4-hour trend. But if you're shorting the 3-push wedge, yeah, you're looking for any sort of close over. Of course, you need to have a spot in your mind where you say, I'm getting wrecked, I'm out of this trade, you know, but look for these little 3-push wedges to pop up. And when you start to see them pop up all over the market, as I said, I mean, Amazon, not so much, NVIDIA, you know, you start to see them pop up all over the market. I mean,
Yeah, I realized that with NVIDIA, it will pump a certain time and then it would dump.
yeah, and just
It will always do it though, always.
and look for these things. And then all of the sudden, when you start to, you know, this is what I always teach. I always teach everybody, you know, market-wide analysis is key. So we get all these things going. We got 3 pushes, wedges everywhere in the market, and we short Apple. Well, now we manage it the same way. Here is our, you know, our stop is going to be, let me get back to my circle. Our stop.
I think you just gave me
To draw. Oh, sorry.
Go
Okay,
ahead.
just real quick, how to manage this one. So we short Apple up here. We start looking for our breakout candles. This is a breakout candle. I mean, it's closing down near its lows. It hasn't broken the range, but maybe we trim at the opening range. You should trim. So now our stop is in profit. Another breakout candle. Here's our stop. Another breakdown candle. Here's our stop. Probably trim at this level. And then this one is kind of another breakdown candle, in my opinion. And we're seeing buyers show up. So for me, my stop goes to right here, and this next candle stops me out.
All out.
Catch that nice little short down. Then again, if you want to keep watching it, you want to look left, you could even, you know, this could even be like a little, you know, micro wedge sort of deal going on right here. Reasonable enough to be looking short on this thing. And you do the same thing, you know, you short the touches of that trend, your stops are somewhere up here, you know, whatever you're comfortable with, breaks back above these supports, you know, and then again, breakdown candle, trim, move your trend. Nice, another breakdown candle, going down. Another one,
Dude,
going
this is
down.
perfect.
And
Dude, you call me, this is perfect.
and this way, you're letting the chart tell you what to do. Don't get me wrong. I love people asking me questions. As I said earlier, if you want to say, River, where should I take profit? Where should I stop out? What should I do? Great. But this answers your question. Should I still hold? Should I still be in the trade? How do I hold longer? The only way you should ever hold longer than your plan tells you to hold is if the chart tells you to hold. And so if you're getting these moves in your direction, great, you know, you're like, you've got the important part done, you know, and so let the chart tell you what to do. If it wants to keep going, great, let it keep going. Obviously, when we're trading same day spies, you know, maybe you get this explosive move, but maybe you enter here and you get these pushes up and you're like, well, this was my breakout candle, so my stop's down here. Well, you're for sure getting stopped out, you know? I mean, like it's something with time, you probably aren't getting stopped out here, you know? On a same day, realistically, because it's pulling back against you, you're going to end up getting stopped out way up here and your stop is going to move up and tag it, you know? So on a same day, that's why I always recommend look for re-entry. You'll make more money than just holding, you know, like if you catch the breakout and push up, exit, buy the pullback, and then you get another move up. You make more than the person who entered here and held till here. I guarantee you, you will every time because they let some profits go red. If you're out at this level, and they let it go back down, the contracts right here are not worth as much as they were here. So you've booked your profit, you've taken the re-entry, now you look for the next move up and you make more money than the person who held this whole time. So always let the charts tell you what to do. Feel free to ask me, of course, but it's crucial for everybody to learn what are the charts telling us, because the charts tell you, should I stop out? The charts tell you, should I take profit? So this is what I do. Do we have any questions on this? Is there another chart you guys want to look at? I mean, you know,
Yeah,
today
River, I
was,
have a question on QQQ.
yep.
Why do Why do a lot of people get optimistic, especially when we're at the bottom of the ranges? And if you look to the left, like you always say, um, those buyers really stepped in right there
right here.
when we started to break down. Yeah, exactly. Um,
Because and people always want to short that.
it's like, and my question is like, okay, you pretty much how I bottomed at 5.7, 5.16, 5.17. You long
Yeah.
that all day, and then your stop is like 30, 40 cents below that.
Yes. Yeah. And you can use, I don't get me wrong, I don't like the long right here. If somebody asked me today, should I buy QQQ right here? I would have told them no. And look, I would have been wrong. And I'll happily admit that. I don't buy calls at a triple
Yeah.
top. Maybe it works, but statistically speaking, real statistics, 80% of the time it doesn't work, because 80% of breakouts fail. So that's why we as options traders, we're dip buyers or we're short rippers, because that's where we get the maximum risk reward. If we buy calls down here, I mean, what, our stop is 60 cents below us. We're looking for a $1.50 move up. I'll take that trade all day. So if you buy here, maybe bottom tick, whatever, we're hindsight trading, we got to pretend. Breakout candle, we move our stop. Breakout candle, we move our stop again. So we can manage the same as we always do. And that's fine. And that's why.
But can I add something to that, River? So let's say how you took along all the way at that bottom of the range and your stop was 60
Uh-huh.
cents below that.
Yep.
Let's say you have 10 or 20 contracts. You see a 10 cent, 20 move up, you trim. As
Yep.
it keeps on going up, you hold the least amount of contracts as runners, right?
Yeah. So what I like to tell people to do is, and for me, I take a bulk, and I'm not saying everybody should. My first trim's big, half the position, generally speaking. 10, 15%, 20%, maybe, I don't care about the percent. I care about my target. So if I'm buying calls here, we're obviously, we're under EMAs, we're under VWAP, we're under hourly 20, we're under all of that. If I'm buying calls here, target one is this jumbled mess of indicators in a level right here. No questions asked. I'm taking half the position off right there. Why do I take half the position off? I just got a whole bunch of financing on the rest of the position covered, and my stop's now above entry. I'm making money. So, and don't get me wrong, people think I take, a lot of like 15% trades, but anybody who trades in voice chat with me knows that's not the truth. We get a bit more than that on average. And so I take a bulk of my position off. Then we break above it. This is going to be kind of, these highs and all this. This is going to be my next target. And since I'm assuming it is a range, since I'm assuming it is a range, I'm going to be out of most of my position here. No questions asked. It's the top of a range. You sell calls at the top of the range. You don't have to exit the full position. Like I said, you can ratchet that stop up and maybe you catch a run or maybe you don't. But big trim, another big trim, and then you can let a couple work if you still have them.
River, you see my question in chat?
This one?
Yeah, no. So your next circle.
This one?
No, where your
This one?
price target was, right? That's your first trim.
This candle? I'll tell you what, it's this one right here.
The blue dot is your first target price, right?
Well, no, really.
That's where you're gonna take profit.
My first target would be here, somewhere in this area.
So were you selling on the red doji or the red inverted hammer, whatever you want to call it, or were you selling the green candle?
I'm likely selling the highs of this green candle because I'm close to the hourly 20, and I assume we're gonna get a pullback.
Or if you were talking about earlier, the VWAP, like if you're talking.
Yeah, and look, if you look right here, we got 20
right
EMA,
now.
50 EMA, VWAP, hourly 20, and 11, all right here.
That's your target price. You're going no matter what. It hit it.
Yep, it's hit. Some are sold, no questions.
Yeah, because some of these candles look fucking nasty.
Yeah, this one, terrible.
Yeah, like oh my god.
When I see this one, there's like
almost. Yeah.
50-50
take a
chance
profit at the top on the wick.
Yeah, 50-50 chance I'm out after this.
All right, and are you putting your stops like on TOS active trade? Are you putting it off the strike price or the contract price or the stock price?
Well, I'm setting it based on the contract price because I'm in there, but I
Are you looking
adjust
at
it.
the contract chart though? That's my big question.
Nope. Nope. I can't say no. Sometimes if I want to see what the volume's doing on the contract, I'll
Then
use
how do you know where to set the price exactly?
So
Like
when
Flips
you
talks about it all the time. Is there a way to set the stock price when to buy an option contract off the stock price?
so when you place an order on Active Trader,
Yes. Can you do a stock price for an option contract?
well, yes, it puts a line on the chart. When you
It-
place your sell order, let's see.
This is my big question is because if this
Well,
is
this
the
is
case,
gonna be-
I'm making the move to the Active Trader. Okay.
So this is gonna be dumb because of like the contracts that I'm in.
Yeah,
Hate you.
That's-
So
I've
see,
done dumber shit.
I place a stop
Oh.
loss and it puts a line on the chart.
Fuck me.
Well, if I want it lower, I just drag it down. And so don't get me wrong, you'll
Oh.
place your stop loss and maybe you'll hit it right on the dot or maybe not. But when you place this order, it pops up. Do you see that? I just bounced my stop loss.
Yeah, no, that's
Yeah.
crazy.
And so that's,
That's why I
we'll
bought
put this
that.
line up. Same as when I buy, I buy with limit orders almost always. So that's what I did here. When we were up here, I was like, okay, I want to buy some. I don't remember what I bought. I think I bought 2 12.50s. It's probably dumb. Maybe I bought 2 10s. But I knew I wanted to buy. So I just
Mine was
adjusted
on
it while
210s.
my limit order was sitting here waiting. So this wick tags me and I'm in and I'm happy,
And so you sold that one.
Yes,
Okay,
and
that's
so
why you're
this
confused
one,
when I was
this
talking about-
trade I
okay.
was fully out of.
Yeah.
The ones that I was just demonstrating the loss with, not so much.
Yeah. Okay.
Yep. And then that'll do it with
That's why because supposed to be talking all the time about the strike price of what his entry set at for the strike or for the contract or not. My bad. Slow down for the stock price. Okay, it's like he's saying, "Hey, I'm at SPY 589.7, whatever it is."
Yep.
Right? He say, "I'm going to go in on calls, or
Yep.
that's where my
Yep.
stop's out."
Exactly. And then you can
because he's
drag it
setting
around and adjust it,
He's
And
already
that's-
placed the order.
Yep. And that's when you'll hear me in VC say it, I might say, hey, we're risking about $10 on these contracts. I know that because I did this and I moved it around and I figured out about where the stop would be. And I can say, hey, we're risking $10 on these. I'm not, the fact that it's $10.
Yeah, that.
It's just I say it so that people know, if we're in at 32.
Oh, by the way, it does let you take a stop, set you a stop automatically before the order set. By the way, but it won't let you know what the stock price is going to be.
Well, no, not for your stop loss. But you can say, like, what I always recommend when you're analyzing your stop loss is just think about the amount of cents. And somebody mentioned it in here. You can look at delta on same days. It gets tricky, but they're exactly right. But we can know, okay, my stop, and I'm gonna make the math easy. Delta, generally speaking, on a good contract, we'll call it $40. Again, I'm using completely made up numbers, but stop loss, we got 40 delta. Stop loss is 50 cents below us. We know that's half a delta. We know we got $20 of risk on the trade. So I just do it like that. If you're risking 50 cents, you're risking half a delta. But the second you're in that trade, you can set your stop and know, to within a couple of dollars what your actual risk is going to be. And then same, that's where there was even some today, and of course I didn't get them. And today I wanted to hit some SPY calls. Somewhere right around here. And I said, I want to buy them for $22.
Yeah, the 590.
Yeah, and they were trading 28 or whatever it was, and it never came back to $22. I wanted to pay $22 because that was 589.10. That was my nice level right here. I knew we had some nice support. I would tell people, hey, the stops are under 588.82, but let's be real here. You get a 40-cent flush against you on a $20 contract into the end of the day, you're down like 80%. Like that's just the way it goes.
Next question, quick question, real quick.
Yep.
One, I have two. Are you drawing that top 3-foot wedge, whatever you call it, on the second candle, or are you waiting for the third one to close out, and then you start drawing your line, then you wait for a retest, and you already know you're good to go?
Realistically, I drew this because
off the second green candle right there.
Yep, this one to this one. Because all you need for a trend is a higher high or lower level, whatever it is, So this one's set. Then when this happens, you look for this.
Yeah. Okay.
And sometimes they'll be huge. Sometimes they'll
Yeah.
take all day. We had a QQQ one recently, and sometimes
Yeah.
they fail.
Yeah.
Here's one. Here's the
And what do you call the opposite of these?
Yo,
Because if you look
River,
at pre-market, it almost
I
looks the
think
same.
I managed the trade pretty good today on the micros, S&P. I put a pretty much a limit order to sell at like 350, and then I put my stop at 240, and then when it pulled back, it stopped me out, but I was still in profit.
nice. Yeah.
It was
Good.
in Legend. I think you could do it in desktop.
Yeah, I haven't played around with that too much, but I'm sure I've heard that it's actually pretty sweet, you know. But that's why when I'm in voice chat, I always try to tell people we're risking about $10. Stops are under whatever level, you know, that, and I try to say that for any trade I enter. Okay, I show you where I went one more time. Oh, so I can't really show you that right now. Maybe I can. Let me think about this for a second. So if I go here, and then I go here, and then I go here, and then I go here. So this is your active trader for your option contract, you know. This is your active trader for it. So if you're on Apple, you know, and you want to set your stop, say, you know, wish we were in these things at 32 bucks, but say our stop's 25 bucks. Or it's a break below this low. You just click here and set your stop, and your stop is now set. And don't get me wrong, as delta changes,
That's
theta,
so
blah,
clean.
blah, blah, it'll move a little bit, you know, but you can also click and drag. So maybe you want your stop below these low days down here. You just click it down and drag, and you figure out about where that is, and your stop is good. Or if we're managing these trades, you know, say we're in this trade and it's going good. Well, I'm going to drag this up and I'm going to say, okay, here's our nice little breakout candle. I move my stop to here. Here's another nice breakout candle. I'm going to bump it up. You know, I want it at the bottom of that candle. I probably want it at the wick. Here's another nice breakout candle. I'm going to bump it to the bottom of there. Here's a big old ripper. Oh, I want to stop, you know, up. Oops, I didn't like that. I want to stop here, you know, so you can drag it around as you need. And use it on those candles, just like I was teaching, you know, that's, you know, and so it makes it very, very easy on Thinkorswim. So at least for me, that's how I do it, you know, all day, every day.
Yo,
This is
River,
why Thinkorswim is the best.
I did 2 research on these 2 great companies that kind of look similar to a graph as of Bookings Holdings. It's Costco and Netflix.
Yeah,
Looks very identical.
Yeah, those ones, I actually know that one. Well, so son, you're kind of correct, but you can always do you know, OCO orders and stuff like that. I just don't love them. I'm personally a pretty big believer in mental stops, but that's for me. And I know that not everybody has that trading psychology, but if you want to do OCOs, you know, you can set it up where buy at 50, stops at 40, take profits at 60. You know, you can do that if you want. I just don't love the OCO orders personally, just because, you know, stops and things can move around as theta works. And, you know, my rule is, you know, as I said, once you've entered a trade, you don't do anything unless you are moving your stop up or you're taking profit, you know? So when you're in an OCO and you're locked in, if you get caught in a little bit of chop, but maybe your level hasn't broken, so you don't want to stop out, but the stop, you know, the chop gets you, you might get stopped out of a trade you shouldn't stop out of. But that's just me. Okay, well, that's going to do it, everybody. Yeah, me too. Exactly, son. Okay, well, that's going to do it, everyone. Thank you all so much. I appreciate you for being here. Great lecture. Narvin, are you, what did you say, Narvin? We're going to have to.
Can you go over Boeing?
Coin? I hope you
Boeing.
Coin, go dump it. We're dumping coin.
I think
Come
coins.
on.
I would have swung long.
Boeing.
Oh, Boeing?
Boeing. Not
you-
Boeing flew.
Nah, I ain't gonna bet against Boeing. They just got some gigantic deal. Look at this. This thing's finally on.
Yeah, that shit flew. That's why I said this shit flew.
Finally on a heater. Okay, well, right on, everybody. Thank you all so much. This was really good. Love all the questions, and thanks for being here. We'll catch you.
River, I love you, man.
Thanks,
That's the
River.
Saudis.
I love you, River.
Thanks, everyone.
Thank you, River.
Yep, we'll talk to y'all soon. Thanks again.